Now, obviously, the big concern for the Kiwi economy is the economic slowdown, is the recessionary environment. And do you think that this jumbo rate cut addresses that?
It certainly does. I mean, the RBNZ has pushed the economy into recession by tightening policy very aggressively, and it's now turning around with inflation under control. The case for restrictive policy setting has stopped, and now there's a case for actually lowering rates below into accommodative settings. We're not quite there yet. I mean, the RBNZ estimates the neutral rate at 3%, so we're still restrictive. But we think they will actually eventually deliver accommodative policy settings by lowering the cash rate eventually to 2.25%.
Right.
2.25, right.
So essentially, this rate cut today is being seen as a more dovish rate cut than previously thought, because that's why we're seeing the Kiwi dollar now react down 0.3%, because the market was not prepared for how aggressive the rate easing cycle would get after 175 basis points of rate cut already in the system.
Well, I haven't seen the RBNZ's new projections, but I suspect they might have signaled more easing than they previously did, which is what we thought they will.
That's the line that I'm sort of picking up on, and that sort of stands out to me here, is this line saying that the committee has confidence to continue to lower rates. Interesting from two perspectives. One, I was listening to the folks over at ANZ this morning who were sort of saying that the RBNZ had taken a risk back in November to go, but not just that, it was to give such clear guidance over the summer in order to ease for that seasonal period, but then to give the guidance, as I said. But for them to come out and say that, particularly given what we saw from the RBA yesterday, which was the main communication hawkish and way more than expected in the market, what does that tell you about the confidence here, particularly given the dynamic between the domestic inflation picture, the stickiness that they've seen progress on, but then the tradable inflation picture, which looks so uncertain right now?
Well, I mean, they did previously already signal that they're going to cut rates further, but obviously if they have increased confidence, that suggests that those forecasts that they previously had will probably materialize, and that's a key reason, I think, why the markets, why the currency is weakening. I mean, there's still some stickiness in New Zealand as well as in Australia on the domestic side, but it's a quite a different environment because we are seeing a very weak economy. We are seeing a sharp rise in unemployment. So that stickiness is unlikely to last, and we've already seen a sharp slowdown in unit labour cost growth. So it will come. Domestic price pressures will ease quite rapidly over the next few quarters.